Ohio reveals high marketplace rates. That's no good. Ohio's health insurance is going up 88%. What? What does that mean for you? Well, we're going to find out right now. Hi, I'm Joey Gingola with Gingola Insurance Agency, and we finally have some information to back up all the speculation that everyone, myself included, has been throwing around for the last several months, even years, as far as what the Affordable Care Act is going to do to the cost of health insurance in 2014. Several states, including Ohio, have come out with information surrounding the upcoming marketplaces, and more specifically, how much they expect insurance to cost. Ohio officials have said health insurance rates will increase significantly under the Affordable Care Act, stating that the average premium is going to go from $223 all the way up to $420. There are 14 insurance companies that have filed proposed rates for over 214 different plans. These plans are required to cover all 10 essential health benefits outlined by healthcare reform and can range between anywhere from $282.51 all the way up to $577.40. We may have just scared the pants right off of you. Honestly, you probably need to go put your pants back on because they've been scared right off. Well, what does it mean for you? Just take a break, hold on, let's just back it up and let's try and make sense of all this. And here's the deal. This is very important that you're going to want to remember. If you qualify for the tax credits, subsidies, whatever you want to call them, for these health plans through Ohio's marketplace, then everything that I just told you is irrelevant. You might as well just turn me off. Well, don't turn me off. Watch the rest of this video. But you might as well not pay attention to these numbers, these scary numbers, because your insurance is going to be drastically more affordable. It doesn't matter what the cost is going to be, because you're only going to be allowed to pay a certain amount of money. You're going to receive a substantial amount of federal money to cover the cost of your health insurance. If you don't, well, you're going to want to go ahead and put on a hard hat, maybe a Kevlar vest, possibly even a full suit of body armor, because you are going to take a beating from the Affordable Care Act. Those income requirements that we were talking about, well, just by some rough estimations, and these numbers have been adjusted slightly from numbers that have previously rolled out, but for an individual, you can make anywhere between $11,615 all the way up to $46,600. And if you want to go all the way up to a family of four, you can make anywhere between $23,800 all the way up to $95,500. If you want to figure out your exact situation, your income, and exactly how much money you would qualify for in subsidy credit, we do have a link in the blog post that's attached to this article for you to go ahead and check out the subsidy calculator that will allow you to do that. I would encourage you to do that. It's going to be beneficial for you on multiple levels. Well, do you have to buy a plan from the marketplaces if you don't qualify for a subsidy? Nope, you don't. Not at all. Not even a little bit. In fact, if you don't qualify for those tax credits, there's really a little incentive for you to purchase a plan through the health insurance marketplace. You're going to be able to buy that same plan outside of the marketplace just as you were today. Well, you're probably asking yourself, what's the difference between the marketplace and the private market? Really nothing. I hate to break it to you, but you will be buying the exact same plans inside the marketplace as you would outside the marketplace. The only difference, and we've talked about this, is if you qualify for those tax credits and subsidies, you will not be required to pay more than 9.5% of your total annual income for your health insurance. So that's a big incentive. Otherwise, you don't have any real reason to buy health insurance through the marketplace. Some of you might be screaming at home through the computer at me, why are costs increasing? Well, the main reason is due to all the additional or mandated benefits that the Affordable Care Act requires. You toss in a little community rating and constant medical inflation, and well, that's a pretty tasty recipe for some expensive health insurance. So this isn't the Affordable Care Act then? You got it. You can't expect to lower the price of health insurance without addressing the high cost of which it's trying to insure. It's kind of like yelling at a garbage dump for making too much garbage. They aren't making the trash, they're just simply taking care of it the best that they can. Now, sure, you have the right to question whether or not the insurance companies are doing their best to prevent the cost of healthcare from overflowing into your bank account. But if we can just have a quick heart to heart, we're being honest with each other here. I'll tell you right now, the most diabolical, greedy insurance company could not get away with these types of increases and still be in business today. So now you might be saying, well, is this just happening in Ohio? Should I be packing up and moving elsewhere because this is ridiculous? I'm not going to pay 88% more for my health insurance. I'll just mosey on over to Pennsylvania. God forbid that has to happen. But if you have to leave the state, are you going to? No, you're not going to do that. Why? Because this is happening everywhere. California actually just got caught with their hand in the cookie jar just a few weeks ago. They kind of bent, stretched, massaged, they gave it a nice little back rub, these numbers for their exchanges, their marketplaces, whatever you want to call it, to the point where they were not really recognizable. They were comparing individual plans to group plans, and they forgot to tell everybody that group plans cost on average about 50% more than individual plans. So they were saying that they were going to be up to just under 30% cheaper than what's available today. Well, it comes to find out that once you compare the individual plan to an individual plan, well, they're actually going to be like 146% higher, possibly. Big difference. So what should you do then? Well, the first step you're going to want to do is, like we said, to see if you qualify for those tax credits and subsidies. If you do, you're going to want to familiarize yourself with the enrollment and application process for the marketplace. And you're going to want to be ready to apply October 1st of this year, as that will be the first opportunity you will have to get your application in to get health insurance through the marketplace. You're going to want to be one of the first people in that marketplace application pool, because we don't know how effective they're going to be in processing this information. Now you're probably saying to yourself, Joey, there's got to be some good news. Can you do something for me to not make me want to go jump out a window right now? Because this has been pretty depressing. And I'll tell you what right now, I've said it before, the Affordable Care Act's crowning achievement is not its affordability. It is its guaranteed access that it provides you to health insurance. It should have been the Guaranteed Access Act, because I tell you what, that's what it's doing. It's allowing everybody in the country the ability to obtain health insurance. The last question that we have to ask ourselves is, or the last question that we hope we can answer is, if we're going to be able to afford it. And if you want, you can also download my free ebook, The Complete Guide to Getting Individual and Family Health Insurance. This is going to walk you through everything that you need to know about getting insurance, and it's going to help you understand the important things to look for when considering health insurance. So, of course, we do have a blog post linked up on jingolainsurance.com for you to click over, read a little bit more on this very, very important topic. We'd always encourage you to do that. And, of course, as always, I am Joey Jingola with Jingola Insurance Agency. Take it easy, everyone.